It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, February 25th, 2016. We have another exciting newsletter in store for you guys and gals this evening, covering crude, S&P, gold, and the euro as we wrap up this fourth week of the second month of the year 2016. Don't forget, we do not do a newsletter on Friday afternoons. Our next newsletter will be next Monday, the 29th, the final drop of this month of February. Kicking off tonight, we got crude, E-mini S&P, gold, and euro. Starting out with oil. Oil is bullish and trading at the highs of the range this evening. We expect a final push higher before buyers take their profit and correct lower tomorrow. Will be an interesting scenario going into Friday's trading session for the oil traders. E-mini S&P, wow. E-mini S&P bullish, bullish, bullish. And we can expect buyers to be using any support levels below right now as an opportunity to buy more on the way up to completing a triple measured move. 2 days in a row, triple ups on the S&P. We got a plan for you guys tomorrow. Everything really hinges on when we get that triple up tomorrow. We'll take a look at that in a second. Gold is range bound with a slight bullish tone this evening with an undershoot of channel highs, which tells us to look for a bear correction lower before buying opportunities show up tomorrow. The euro looks pretty similar. Euro is also trading sideways. We get a megaphone this evening on the euro. Slight bullish tone on the euro currency futures, which tells us to buy low and sell high using failures until we see this market find a significant direction. Pretty interesting chart on the euro right now. Euro wins the award for the oddest looking chart of the evening. We'll take a look at that in a moment. Before we get into charts tonight, though, we'll check our schedule, and I want to remind you guys to make sure you're watching this video right now on our trading blog. The only place to find the full-length version of this newsletter video is on our blog at sidewaysmarkets.com. If you're watching the video on our YouTube channel, just go ahead and follow the link in the description. Come over to our trading blog and watch the full-length video here with us on sidewaysmarkets.com. While you're here, upper left-hand corner, grab a free pass to attend our live trade room as a guest. In the lower left-hand corner, you can register as a member of our nightly newsletter mailing list. Just make sure you check your inbox. I'm going to send you a verification email. Right below the video tonight, you'll see a spot to download every chart you see me using tonight in the video. You can download that chart by following that link right below the video tonight on our blog. Over on the right-hand side, you can join our free trial. That way you can learn more about the strategies we use here at School of Trade. You can learn more about what it means to be a member. And, of course, don't forget, we've always got someone standing by 24/7, 365 to give you guys any answers to your important questions. Brokers, data, trading strategies, whatever the case may be, no question too big or too small. Use that live support button on the right-hand side. All right, guys, ready to rock and roll? Wrapping up the week here. Final newsletter of the week. It's been a great week. First things first, let's check the calendar for tomorrow. Tomorrow morning, February 26th, not the last day of the month. We got one more day next Monday. Tomorrow morning, we do have a big, I believe it's economic sentiment, consumer confidence in the EU tomorrow morning at 5 a.m. Eastern time. If you're trading gold, if you're trading euro, definitely want to be watching those markets tomorrow morning, 5 a.m. Eastern time. If you're in London, Asia, Australia, right? If you're up early, you got the economic sentiment tomorrow morning at 5 a.m. coming out of the EU. For the rest of us here in the U.S., we know we've got tomorrow morning, we have big news here coming out at 8:30. We got a kind of a group of news here. We got GDP, international trade, and personal income. 3 red star news events tomorrow. That should kickstart the session for us bright and early tomorrow morning. And then, of course, we have 10 a.m. consumer confidence, or consumer sentiment, I should say. Relatively strong news this week. We had a rebound in durable goods and manufacturing today. So tomorrow will be interesting to see what the GDP comes out as, right? What the international trade looks like tomorrow. All eyes will be on that red star news tomorrow morning at 8:30. Also, don't forget, tomorrow is a Friday. Fridays are, it's early in, early out on Friday. I always tell my clients in the trade room, it's okay to hold open positions into the afternoon session, but it's always going to be the most reliable trading before 11 a.m. Eastern Standard Time on Friday morning. All right, so don't forget, get to it early. Get out of it early. And again, if you want to hold on to some positions into the closing bell tomorrow afternoon, that's perfectly fine. But remember, at the end of the day, at the end of the week, at the end of the month, at the end of the quarter, traders take bigger risks. And bigger risks by traders combined with lower volume means a lot of slippage. So be careful, careful, careful. End of the day, end of the week, end of the month, end of the quarter, end of the year. Traders who are either up or way down on their accounts take bigger risks. And of course, liquidity is lower, and that is that's a recipe for disaster for a new trader because stops are not going to hold. If you need help navigating around the news, if you need help with anything else, don't forget we open up our trade room tomorrow morning at 8 a.m. Eastern Standard Time. You ready to rock and roll? Great to have you here with us this week. Don't forget to share this video with a friend, okay? Starting out tonight here with crude oil. Crude oil is bullish and trading at the highs of the range, and we expect a final push higher before buyers take their final bit of profit and correct this market lower tomorrow. We have a double up, a bull channel, and a trading range to work with on the chart this evening. The double up is actually quite interesting. The double up gives an easy explanation for why price just seemed to stop on a dime at 33.49. Now, if I'm a buyer and I'm watching this market just cruise higher this afternoon, I mean literally just bam, straight through the roof, and then it just turns at 33.49. There's no measured move here, right? But there is a symmetrical projection, right? Projections go from A to B, and then without a C, it goes to C from there. As you can see, I have it illustrated here right now for you, that double up. Now, think about it. If you're a buyer, price test 33.49, there's nothing really there except for this kind of hidden, right? This kind of hidden double up here. Right? It's not most traders are not going to be looking for it. So bottom line is, if I see that thing turn around like this, I'm not going to have taken profit there, right? I will have been caught off guard. Most traders will be caught off guard by that level of resistance because there's really nothing else there. And that tells me that a lot of traders, if they didn't get out of this trade, it's probably going to find a way back up to that high. And whether or not we see new sellers enter the market, but most of the bulls who are still in that move now are going to go, whew, I have a chance now to take the rest of my profit, right? And they'll get out of that position up above that 33.49. So the bottom line is that double up, right? Most likely here, that double up most likely caught a lot of traders off guard. And so we expect them to get out if it reaches that level again. Now, the bull channel is unproven at this point, but we had an unproven channel yesterday evening. Remember last night's channel? Yeah. Did you see where the pullback happened? Yeah. It worked out pretty well today, didn't it? So we saw the same thing last night, and it worked flawlessly today, which tells us to look for buying near the lows of that channel. Last but not least, that trading range may end up as a head and shoulders as well, but they both tell us to look for a trap low with seller failures for buying opportunities right back below those lows. So once again, the three components we see in the chart, right? We have our double up. Again, that double up, I think, probably caught a lot of traders by surprise. That tells us that, of course, it is resistance, right? But it tells us that we're probably not going to have a problem seeing it go back to double top, right? That double top will most likely be greeted by, tough to say we're going to see new sellers enter the market there, but we could definitely expect the buyers who go, a little sigh of relief. Whew, I was finally able to take my profit where I should have taken it the first time. It may push through a little bit higher here, but it should give you, after we see a possible double test up here, then you're looking for a two-legged measured correction, two-legged 10 candles or more, right, before the buyers try to take it again. The bull channel, this is that same kind of unproven scenario we saw last night. If you didn't see last night's newsletter, go back on the page, scroll down the page, and you'll see last night's newsletter. Up to the high, right, down to the low. Buyers will be waiting to buy the low of that channel. And don't forget, right, it might end up pushing through this because of that double up I was talking about. And of course, as it comes back down, look for that to be your two-legged correction, right, after that double up is completed, right, before this price goes higher again. Last but not least, we have, of course, the short-term bull channel, short-term bull trading range. We have a bullish move into the range, followed by kind of what I would call an unproven head and shoulders, an unproven trading range, but we're going to be looking for any reasons to find area of support, buyers will be waiting using bear traps below the 32.76 area. Buyers will be waiting for a correction support area at 32.28. And in all reality, that range may be the most important thing that we get tomorrow. And remember, range rotation. We go from the high down to the low. If we get to the low, buyers will be looking to take it back to the high, up to the high, look for bull traps at the highs, back down to the lows, right? Down to the lows, back up to the highs. Now remember, when you're trading around the highs and the lows of a range, remember this is a bullish range, so buying the low will be a little more reliable, right, than selling the high. Bottom line, though, is we know that use failure patterns, right, around the highs and lows of the trading range, right? Remember, use those failure patterns, right, at the highs and lows. So the lows of the range, using seller failures. At the highs of the range, you're using buyer failures. All right, guys, and of course, that also gives us a range expansion level at 32.03 for support, and it gives us a target overhead at 34.22. In my eyes right now, the line in the sand for the buyers to really keep control of this market right now is that 32.28, right? So a deep correction here, that's where the buyers are going to have to hold that. If it doesn't, it's going to want to tumble here and make a run back towards that low and most likely finish up the session trading inside that range that we started off inside today. That's your plan for Crude. Don't forget, we'll be trading that market live in real time tomorrow morning. Come out and join me tomorrow morning at 8 a.m. Eastern Time. Moving on now to the S&P 500. The E-mini is bullish, and we can expect buyers to be using any support levels below right now as an opportunity to buy more on the way up to completing the triple measured move overhead. We have a bull channel with an overshoot, of course, a triangle, and a measured move to work with this evening. The bull channel is ugly and unproven, very similar to what we saw last night on crude oil. And the overshoot above the highs continue with such strength that the buyers will likely use the highs as support on the way higher. The triangle has a massive breakout higher, and the finishing point of that triangle will be used as support if this market makes a deep correction overnight, or, what is a little more likely, if we complete the triple up and price collapses back down tomorrow. Last but not least, the triple measured move, 2 days in a row for this S&P, by the way. That triple measured move will be an easy place for long-term buyers. We call them swing buyers in the trade room, the chat room, to take profit, and we'll look for a double top at the 1956 for a reversal opportunity tomorrow morning if we get the correct signal, right? Now, three pieces to this puzzle, right? Three pieces to this puzzle. First one is going to be this major, what I would call unproven and really quite ugly bull channel. I gotta say, if it wasn't for this right there, if it wasn't for that little wick clearly responding to it, I wouldn't even think it was this channel. I wouldn't even think it was there. It looks just like a triangle breakout, right? So that definitely tells me there are some traders who see this channel right along with me, and that strength that just blew right through that high, we're going to expect them to try to hold the high of that channel, right, and try to finish off that measured move. Now, don't forget, if they hold the high of that channel and they finish off that triple measured move, now this is a double overshoot, and double overshoots are huge selling opportunities, right? So look for this to complete the triple measured move, look for it to be a double overshoot, and then buyer failure, right back down, right? Where are we going to go if we go back down? Probably right back to the base or the fine point, right, of that triangle, right? If you want a good example of that, look at gold from last night. Remember what happened on gold? Gold went all the way back down to the tip of that triangle. Same scenario here that we're seeing on the S&P. So right now, if you want to be a buyer on this, watch closely and see if they're going to hold the high of that channel as support, right? If they can't, then look for pullbacks to support levels and just wait for some proof, because we definitely have an overshoot here at these highs, and an overshoot would definitely tell us that the most reliable trades are going to be all the way back down. But this market is such a strong market, and again, I don't really think this channel is really the best looking channel in the world. It just tells me, though, that they know it's there, and that gives me reason to believe that these buyers Usually when we see price just get through a measured move like that and keep going, it's usually not going to stop until it gets to that triple measured move, and there will be sellers waiting for that. We'll talk about that in a moment, right?